This video is based on the PhD research conducted by Dr. Sonjai Kumar, which explores enterprise risk management (ERM) practices within the Indian insurance sector. One of the key focus areas of the study was to identify and understand the challenges faced in implementing ERM frameworks across Indian insurers. The research involved in-depth interviews with senior risk management professionals from the industry, providing valuable practitioner insights into real-world barriers and success factors. The findings were published in the Journal of Risk Management in Financial Institutions, Volume 18, 2025.
Okay, so let's talk about India's insurance sector. It has this massive, ambitious goal to get every single citizen insured by 2047. But a brand new study is pulling back the curtain, and it shows a bunch of hidden internal problems that could, honestly, stop this whole thing in its tracks. So what is really going on inside one of India's most important industries? Let's dive in and break it all down. Here's what we're going to cover. First, we'll look at just how big this ambition really is. Then, we'll dig into the 3 big hurdles the research found, some serious confusion on the front lines, some major cracks in the risk culture, and a feedback system that's pretty much MIA. And finally, we'll connect the dots and see why this all matters so much.
All right, let's set the stage. The vision for India's insurance sector isn't just growth, it's a complete transformation. We're talking about an industry aiming for the stratosphere. But, as we're about to see, when you try to climb that high, that fast, you're going to hit some pretty serious turbulence.
And to get this rocket off the ground, the Indian government has pumped in a truly massive amount of cash, over 17,000 crore rupees, into its public sector insurance companies just since 2019. That is a huge, huge bet on the future.
And this really cuts to the heart of the tension. On one hand, you've got this incredible vision of insurance for all, opening the doors to 100% foreign investment. But on the other hand, there's the cold, hard reality that these big public insurers need constant cash infusions just to stay in business. It's a huge disconnect.
So all of this leads to the one question that really matters. Is the foundation of the industry, its whole system for managing risk, is it actually strong enough to handle this kind of explosive growth? Or are we building this massive structure on shaky ground?
Well, the answer to that question starts right here with the very first hurdle, and it's a big one. It's a fundamental breakdown at the most basic level you can imagine, the front lines. Now, before we see what's going wrong, we got to understand how this is supposed to work. The global standard is something called the 3 lines of defense. Think of it like this. The first line, that's the business units, the people on the ground. They own and manage their own risk. The second line is the risk department. Their job is to watch over and challenge the first line. And the third line, that's internal audit. They come in and provide an independent check on the whole system. Sounds simple enough, right?
Well, apparently not. Get this, the study found that a staggering 60% of senior risk professionals got this wrong. They couldn't even correctly identify what the first line's main job is. That means the majority of people playing the game don't even know the most basic rule. It's wild.
And that confusion just rolls downhill. A huge chunk of people think the second line's job is to find the risk, when really their job is to oversee and challenge the people who are supposed to find the risk. This isn't just a minor misunderstanding. If the referees and the players are reading from 2 completely different rule books, the whole game just collapses. And all of this confusion leads to something the study calls an audit mindset. Basically, instead of seeing the risk department as a partner who can help you make smarter business decisions, the frontline units see them as the cops, someone to be feared.
And listen to this quote from someone in the study. It just lays it all out there. There's zero trust. People are actively afraid to share data because they think it'll just bring more trouble. In an industry that is literally built on pricing risk correctly, that fear it's like a poison. And that's just hurdle number 1.
So, when you have a broken process like that, it's only a matter of time before it becomes a people problem. And that takes us straight to the second hurdle, the culture. When the rules of the game are this fuzzy, you end up with deep, deep cracks in the company's ability to even talk about risk in a coherent way.
This quote from a senior professional is pretty shocking. It says there's no common language of risk. HR, marketing, sales, they're all speaking different dialects. Which really makes you wonder, how in the world can you manage something if you can't even agree on what to call it?
And a huge part of the problem comes down to a total failure in training. Look at this.
The study found training is basically just an afterthought. It's not structured, it's often just a one-and-done thing for new hires, and then nothing. There's no real push from the top to make risk expertise something the company actually values.
You know, one way to fix this is to have risk champions embedded in every department, someone who can translate and build that common language. But as you can see from the data, that's just not happening on a wide scale. The very people who could be fixing this problem are mostly missing in action.
Okay, so you've got confused roles, which leads to a weak culture. And that brings us to hurdle number 3, and this is the one that really locks all these other problems into place. We're talking about a completely broken or maybe just missing feedback loop.
So think about it. If you want people to speak up and share critical information about risks, the good and the bad, you have to encourage that behavior. But look here, the industry is totally split on whether that kind of transparency should even be rewarded. There's no clear incentive at all to do the right thing.
And it actually gets worse. When people are asked if their companies reward good risk behavior, making smart, calculated decisions, the answer was a resounding no. So even when someone does the right thing, it's met with silence. Why would anyone bother taking a smart risk if it's never recognized?
And here it is, the final nail in the coffin of the feedback loop. An overwhelming majority says that for senior managers, there is absolutely no link between their pay and how well they manage risk. And if compensation at the very top isn't tied to performance here, what message do you think that sends to the rest of the company about what really matters?
So, we've seen the internal chaos, confused roles, a weak culture, and zero incentives. Now it's time to connect these dots and ask the biggest question of all. So what? What is actually at stake here?
Because, let's be clear, these are not just problems for a corporate boardroom. A fragile insurance sector is a threat to the entire economy. When insurance doesn't work the way it's supposed to, businesses can't grow, families can't protect their futures, and the whole financial system becomes more unstable.
And it's really important to put this in context. This is not just an Indian problem, not by a long shot. The study points out that these exact same foundational cracks in risk management have shown up all over the world, in critical industries from construction in China to energy in Canada.
So what's the fix? Well, the study is pretty clear on this. This is not something that can be solved from the bottom up. It's going to take a real collaborative effort from the very top, the regulators and the company boards working together to completely rebuild how they approach risk. Which leaves us with one final, absolutely critical question. With billions of dollars in investment on the table and the financial security of an entire nation hanging in the balance, can India's insurers actually fix these deep foundational cracks? Can they build a risk culture that's strong enough to support their incredible sky-high ambitions? Because the whole world is watching to see what happens next.